Ladies and gentlemen, on behalf of Kaptify Consulting Investor Relations team, I welcome you all to the H2 and FY26 post-earnings conference call of Concord Control Systems Limited. Today on the call from the management team, we have with us Mr. Gaurav La, Joint Managing Director. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to briefly run us through the investor presentation with business and performance highlights for the period ended March 2026, the growth perspective and vision for the coming year, post which we will open the floor for Q&A. Over to you, Gaurav.
Thank you so much, Vinayji and the Captify team. And good afternoon, everyone. And thank you for joining Concord Control Systems Investor Call. Today, I don't want to take you through only numbers. Numbers are very strong, and I will come to them. But more importantly, I want to explain what Concord is becoming. हमारी जर्नी क्या थी और अब हम किस रास्ते पे चल रहे हैं. Concord is no longer just a railway equipment manufacturer. हम अब सिर्फ प्रोडक्ट्स सप्लाई करने वाली कंपनी नहीं है. We are building what we call internally the intelligence layer of modern railways, covering propulsion, safety, control, communications, diagnostics, and green mobility. FY26 has been a very important year for us because the business has now started reflecting the strategy we have been building for last few years. Concord is a platform, not a product company. This is the core message which I have for everyone today. The most important point which I want to share and I want our investors to understand is that Concord is becoming a full stack railway technology platform. Railways globally are moving from mechanical systems to more intelligent, more connected, more software-led and safety critical systems. और इसी ट्रांजिशन में कॉन्कॉर्ड की पोजीशनिंग बहुत पावरफुल बनती है. We are integrating mission critical hardware with softwares, embedded systems, IP, safety approvals, and lifecycle services. This is where the margin profile, customer stickiness, and the scalability of the company will further improve. Our journey is from a hardware supplier to a railway electronics company to a control systems company and now moving towards a railway intelligence platform. This is the shift which we want to focus on as a company. Now, our business today stands around 4 integrated pillars, and this is the most important slide of my presentation where I would want you to spend a little more time and understand these integrated pillars. The first pillar is the green sustainable mobility, which includes battery, hydrogen, hybrid, and zero emission propulsions, advanced chemistry cell, upgradations for railways. The second pillar is the smart locomotive with intelligence. So when I say smart locomotive with intelligence, I basically mean that we will make locomotives more connected, more monitored, and more data driven. The third railway safety pillar is Kavach, multi-section digital axle counter, and other safety critical technologies, which we are developing and continuously working on. And the fourth most interesting pillar is the AI-driven diagnostic and sensing. We believe that more and more connected trains, more and more predictive maintenance, and more sensing will give us the real-time data monitoring, will give us the asset intelligence, and that is going to be the most critical component for decision making going forward in the railways industry. अब जो रेलवे इंडस्ट्री है उसमें बहुत सारी कंपनीज एक प्रोडक्ट बनाती हैं। कोई प्रोपल्शन करता है, कोई सेफ्टी करता है, कोई मॉनिटरिंग करता है, बट Concord's strength is that we are bringing these layers together. Our platform does four things: it will sense, it will decide, it will act, and it will learn. And that is why we say Concord is becoming the brain of modern rolling stock. The first pillar of green mobility. Railways are one of the largest transport ecosystems in India and globally. And the next wave is not only electrification, but it is about energy efficiency, it is about battery systems, hybrid and hydrogen propulsion based technologies being adopted, and overall bringing down the life cycle cost of the entire ecosystem. Concord has already demonstrated India's first indigenous zero-emission retrofit by converting a diesel locomotive into a battery-powered unit. ये सिर्फ concept नहीं है. This is a working proof of our engineering capabilities. And the bigger picture is that once you understand propulsion, once you understand batteries, the control electronics behind it, the communication and the safety integration, the cooling around it, you are not just selling a component. You are building a platform which can be adapted across multiple railway use cases. Advanced chemistry cell battery upgradation is also a very large opportunity going forward. Lead acid and VRLA systems will gradually move towards advanced chemistry cells because railway needs reliability, compactness, low maintenance, and better life cycle economics. The second pillar is smart locomotive intelligence. A locomotive of the future will not only be a standalone machine. It will be a connected, monitored, and an intelligent asset. A very strong example of this is our remote monitoring solutions and distributed power wireless control systems. These technologies enable multiple locomotives in long freight train to communicate and operate in synchronization. इन सिंपल टर्म्स, अगर इंडियन रेलवेज को लॉन्गर फ्रेट ट्रेन्स चलानी है, हायर टनेज मूव करना है, बेटर ब्रेकिंग कंट्रोल एंड फ्लीट ऑर्केस्ट्रेशन पे काम करना है, ओवरऑल फ्रेट का थ्रूपुट इंप्रूव करना है, so technologies like DPWCS and real-time monitoring and intelligent locomotive becomes very, very important. And this directly aligns with Indian Railways freight growth ambitions. And for Concord, it validates our ability to build mission critical wireless control systems for heavy haul operations. In the third pillar, we talk about the railway safety. Safety is not optional in railways. Kavach is one of the most important railway technologies program, and railways as a whole is deploying a lot of capital expenditure on this, and Concord through Progota is participating in this opportunity. हमारा फोकस सिर्फ ऑर्डर लेना नहीं है. Our focus is to build a credible, scalable, safety critical railway technology business. The Kavach opportunity is large, long duration, and strategically important for us. And we feel that Kavach and MSTAC put together will lead us in the safety domain of railway electronics, not only in India, but as well as for other markets as well. Overall, we are part of a very high uh, entry area with approval driven railway electronics opportunities. Now, if I talk about the most important, or the diagnostic sensors, the fourth pillar, which is all about the predictive maintenance and diagnostics. Railway are now moving from a reactive maintenance to a predictive maintenance. पहले फेलियर होता था, फिर रिपेयर करते थे. अब रेलवे बहुत सारा चेंज हो चुका है, एंड फ्यूचर इज अबाउट डिटेक्टिंग अर्ली, प्रिडिक्टिंग अ फेलियर, एंड प्रिवेंटिंग अ ब्रेकडाउन. And we are proud to be a part of this ecosystem. We are already working on few technologies like Wild, like overhead monitoring with AI-based diagnostics as part of this data layer. This is an important control system and diagnostic tool which Concord will install on railway assets. We can create long-term service, we can create monitoring, maintenance, and analytic-led revenue stream from this. So this will not only bring a one-time sale, but an annuity-based revenue stream as well for the company. This is where the business model gradually moves from a one-time product to a more scalable, recurring, high-margin revenue business. Now, if I talk about Fusion, it is one of a very strategic moves this year, and Fusion positions Concord into the high value flex PCB and premium EMS sector. ये acquisition सिर्फ capacity addition नहीं करता, backward integration नहीं करता, बॉक्स बिल्डिंग कैपेबिलिटीज ऐड करता है, इंपोर्ट सब्सटीट्यूशन ऐड करता है, हमारी ओवरऑल इलेक्ट्रॉनिक्स के ऊपर जो डीपर कंट्रोल है हमारी मैन्युफैक्चरिंग पे, वो हमें ऐड करके देता है. As railway systems become more electronics and software led, this is a very important high quality manufacturing asset which now adds to the overall strength and capability of Concord. Fusion allows us to move up the value chain from just a railway product to electronic subsystem, from manufacturing a very our own integrated production with domestic supplies potential as well as a lot of global opportunities. And I think this is the most important part of our story as a company. Our revenue model is evolving. Historically, we were more product led. Going forward, we feel there will be a mix which will have an increasing trend of products, AMCs, softwares, IP licensing, annuity based services, and lifecycle support. This is why we say Concord is not just building the railway products. We are building the engineering. We are a company which is building the brain of modern rolling stock. Just like a human brain controls movement, safety, communication, and decision making, Concord's platform integrates propulsion, Kavach class safety, wireless controls, monitoring, and diagnostics going forward. आई थिंक हमारी कंपनी का यही मोट है. Individual products are important, but the real value is an integrated railway intelligence platform. Very few companies will have this combination of domain knowledge of railways, approvals, R&D, electronics, safety systems, and the understanding of this manufacturing as well as the execution capability. The strategy is now very well visible. If I come to the numbers now, FY26 has been a landmark year for Concord. We delivered a revenue of from operations of 210.47 crores with a PAT of 42.7 crores and an EPS of 42 crores with an EBITDA of 62.1 crores. More importantly, our executable order book as of 31st March 2026 stands at approximately 697 crores. This order book is more than 3 times of our FY26 revenue. giving us a very strong visibility and confidence. So the story is not only about the future potential. आज numbers में भी वो performance दिख रही है, order book में भी visibility दिख रही है, and technology roadmap में भी scale दिख रहा है. We have grown profitably, we have added strategic capabilities, and we now have a much stronger base to scale from. And now, if I have to conclude the overall journey so far, Concord today stands at a very interesting point. We are operating at the intersection of four powerful themes: Indian Railways modernization, safety, green mobility, and an intelligent railway electronics. Our ambition is clear. We want to build Concord as one of India's most complete railway technology platforms. हमारा फोकस बहुत ही सिंपल है: स्ट्रॉन्ग एग्जीक्यूशन, हाई क्वालिटी टेक्नोलॉजी, डीपर रेलवे रेलेवेंस, and sustainable profitable growth. With that, I would like to pause here and open the floor for questions.
Thank you, Gaurav. All those who wish to ask a question may please use the option of raise hand. Once you raise your hand, we'll be unmuting you so you can ask your questions. Till you do not finish your question, please do not mute your line. All those who wish to ask a question may please raise hand now. So there is a question in the Q&A line. If company will generate revenue from Kavach in this financial year, other than the trial order which is under process, will the company?
We have already started working on the field trials, and we hope that it will be a very successful year in terms of Kavach for us.
Participants who wish to ask a question, please raise hand. Otherwise, you can put the question in the chat box or in the Q&A box. We'll take the first question from Ajit Sethi. Ajit, you can go ahead, please.
Thank you for the opportunity. So our trade receivables have increased significantly during the year. So could you help us understand the key reason behind this increase and how should we think about receivable days and working capital going forward?
Thank you, Ajit. Thank you so much for asking this, and I'm very happy to answer this as a first question. See, in the railway industry, the execution is typically back-ended, with a significant portion of deliveries and billings happening in Q4, especially towards the closing months of the financial year. As a result, receivables on 31st of March balance sheet naturally appears elevated. However, these are largely operational receivables linked to executed projects and customer acceptance cycles. And it is a railway as a customer. So when you talk about railway as a customer, there is in fact, if one were to look at our internal position as of June, the receivable cycles already improved meaningfully when we see our last financial year versus this financial year.
Yes, Ajit.
Okay. So we should expect this type of working capital going forward also, right?
Absolutely.
Yeah. Okay. And so coming to our short-term debt, this is also had increased significantly. So while company is guiding for a strong 40 to 50% growth CAGR going forward, so how should we think about the debt levels and balance sheet strength over the next few years?
So Ajit, as you can see, the overall company growth is at a higher trajectory, and these Q4 numbers are always H2 is always heavier than H1. Because of that, there's always a working capital requirement which arises in short term, and that's why there will be always a significant jump in our overall working capital requirements with an unprecedented order book of 697 crores to be fulfilled going forward. And eventually it will come down. As a management, I think till last year we were more focused on ensuring deliverables and achieving what we need to achieve to prove. This year we will be more disciplined and we'll be more focused on execution as a company.
So what kind of peak that we can expect this year, next 2 years, if possible, you can share?
Peak in terms of
Debt.
very difficult to comment today because in the Q1 we will always have higher receivables coming from our clients, and it then shapes up to a more sustained order book execution over the year rather than more stressed in the last quarter, which has happened in our last financial year.
Okay. And we are guiding for a 20 to 25% EBITDA margin. And this quarter, we had done around 30% EBITDA margin. So we are being conservative on guiding, right?
It is difficult to say that we have been conservative in our guidance. We try to be more and more realistic in our guidance, but I think we are in a situation where the railways is transforming. The technologies are more and more required, and the adoption of technology is happening faster than even we imagined.
Okay, sir. Thank you.
Thank you, Ajit. We'll take the
Awesome.
next question. Yeah.
Can we switch off
Yes.
the presentation slide so that we can keep talking?
Yes, sure, sure, sure. Yeah.
Thank you so
We'll,
much.
thank you. We'll take the next question from Shubham Agarwal. Please go ahead.
Good afternoon,
Yes,
Gaurav ji.
Shubham.
Congratulations on a great set of numbers. So, I have a couple of questions. The first question was, your order book has been growing sizably. As you mentioned, it's 3.3 times the FY26 revenue right now. So, going forward, wouldn't you say the execution also perhaps will have to grow at a faster pace than what we are guiding of around 40 to 50% revenue growth? And just an understanding of whether there are any uh, likelihood of penalties for completing or not being able to complete the orders on time?
So Shubhamji, I think FY26 has been a very unprecedented year where we were on one hand executing this growth and creating these numbers which are today visible. But on the other hand, it was also fructifying to see such a large order book uh, being achieved by us. And I think that gives us more positioning strength for this entire year. Our whole planning is now more structured because we have such a large order book to fulfill going forward. So I think हमने पहले भी किया है, हमने पिछले साल भी एग्जीक्यूट किया है और हम आगे भी करेंगे. So hopefully we should keep doing our best in this.
Great. Just another question on the fusion electronics business. I had asked you last earnings quarter, and you had mentioned that perhaps you'll be able to give more guidance in the next earnings call, because at that time, I think you had just acquired the electronics business. So, like 6 months later now, how do you think we are placed with the fusion electronics? Like, any revenue we can think of achieving from that business this year, this financial year?
Sure. I think fusion is one of the most interesting and a very strong strategic acquisition which we did last year. And किसी भी business को acquire करके अपना culture, अपनी team, अपना setup build करने में थोड़ा time लगता है. We generally give ourselves 300 days to run the entire cycle in 100 days phenomena. So I hope this year will be a revenue contributing year as well.
Okay, great. And just one last question on Progota. Like, is there any plans to increase your ownership stake of Progota this year? Like, given that you are now going to be executing multiple orders for the Kavach 4.0 business also?
So Shubham ji, I think we have been very frugal in terms of our investments, and as and when we see an opportunity where our investments can significantly garner returns for the company, we take that step. So hopefully, whenever that need arises and that step is required, we will not deter to take any such step.
Okay, great. Thank you so much, Gaurav.
Thank you. I will take the next question from Utkarsh Bhadoria. Please go ahead.
Hello. Hi, Gaurav. How are you? Amazing. Congrats for the continued growth which you're showing. So structurally, you're growing really well. So congrats to you for that. My question was that essentially, I think a lot of things are proven in our business now, where you are showing execution. But one major thing which I had in mind is when will our operating cash flow turn positive? Because from your experience in railways, receivable is one issue, and of course we are moving into new businesses, so inventory also becomes a different ball game altogether now. So how do you see working capital shaping up, and when will you turn positive here?
So, Utkarsh, thank you so much for your patronage and keeping us always on toes and asking the most relevant questions. I think
Right.
railway as an industry is always, as I mentioned earlier, is
Mm.
the execution is typically back-ended. Railways has no issues of receivables. It's just the cycle. You're
Mm.
you're completing a lot of deliveries in the last quarter of H2, and your payment realization generally happens in the first quarter of the preceding year. That in turns makes the balance sheet look more heavier, and the receivables appear naturally elevated. But overall, I think this is a year where we can be more planned because there is a sizable order book to execute. And in the past years also, we have been continuously proving our performance with our
Mm.
execution capabilities and simultaneously developing multiple technologies as we move forward for not only the Indian market but from a global standpoint. So I think there will be a continuous growth-led fund requirement which will be there in the company, but at the same time, we are overly cautious, we are more disciplined, and we have better execution capabilities going forward as a company.
Gaurav, my only worry was that, going ahead, of course, this payments coming in has been the issue from railways, but we've seen in some other companies also in Connects and all. So there have been certain issues relating to order execution and then payment delays and stuff like that. But it shouldn't be like the orders. You're not able to actually have the money to implement the orders coming in. So that is one major concern, right? With a negative cash flow. Essentially, the entire profit which you're currently showing is something which they haven't given you as yet. So you're kind of funding the entire project right now.
Utkarsh, apparently, from the way you look at the balance sheet, this
Mm.
may be appearing as a very elevated number. But generally, railway payments are very well streamlined. There is
Okay.
absolutely no issue in railway payments. It's
Mm.
just a cycle and a process. And
Okay.
you're dealing with the sovereign, so there is
Mm.
no issue of any penalties or bad debts happening. It is
Right.
just a process and a cycle, and I think we are overly cautious in saving each penny and maintaining our cash flows. And I don't think cash flows would be a deterrent of growth for the company.
So there's no liquidity challenge at all.
We are a healthy and a financially, I would say, disciplined organization.
Have
We
you
are
seen some
overcautious
improvement,
there, definitely.
like in the from April onwards? Have you seen some
That's exactly what I
receivables?
said.
Right. So that's what it means that money started coming in. Well,
Absolutely, absolutely.
done. It's the balance sheet impact
It's
as
just a
on
cycle.
31st. Okay, done. Thank you so much, Gaurav. Thank you for your time. And
Thank you,
one
Utkarsh,
more
for
question,
asking
if I
these
can ask
questions.
you, was on the retrofit diesel engine and the green hydrogen space. I'm very excited about that space in the current scenario where government is looking towards a more uh, environment friendly options. How do you see this space going forward?
So, this is so you have to look at this. Thank you for asking that again, Utkarsh. You have to look at it from a bigger picture, which I was also sharing when I was sharing the entire presentation and the new story of Concord, where we see ourselves growing. The bigger picture is that once we understand this entire propulsion, battery, control electronics, cooling, communication system, and the integration of this entire product, this is going to become not only a component cell for us, but we are building the entire platform stack for multiple railway use cases with this. So zero emission is a very strong pillar because the overall energy efficiency is going to improve not only in India but all across the railway network globally.
How did you see that last order turning out with NTPC? And then, I mean, further inquiries or any traction on that space, in that space?
It's been a very active space.
Okay. Okay. Great. Thank you so much.
Thank you.
Thank you. Thank you, Utkarsh. We'll take the next question from Harshil Solanki. Please go ahead.
Hi, Gaurav. Good afternoon.
Hi, Arshil. Good afternoon. Please carry on.
Yeah, so I had questions on the Kavach. So there is a tender for 4,500 loco units which is active. So when do you expect the outcome? Because I think it closed on 14th April and we are past 1 month. So any idea when the order will be and how much do we expect to win from that tender?
So, Harshil, I think we are positioned as a completely in-house indigenous Kavach R&D powerhouse with the entire technology being developed and designed by ourselves. And we feel we will be one of the most cost-effective, backward integrated Kavach player because of our advanced rail capabilities. And with all of that, we have been aggressive in this space and tenders which are coming. And in the past, we have quoted few of them as well. But railway has a process of tender finalization, and in due course, we will all see the outcome.
Okay. So the tender will still take time. Is that what you are trying to say? Or you
There is a
don't know?
process.
Okay. And second thing is, what are the number of loco units, if you can highlight, in the Indian Railways? Because what I'm trying to understand is, already 17,000 loco units have been tendered for Kavach, including the 4,500. So does Concord have more scope to win loco orders, or is the entire loco opportunity is done and we will only get to play the track opportunity which is left, is what I'm trying to understand from this.
So the total population of locomotives in the country would scale somewhere around from 13,000 to 16,000, including the train sets and the memos.
Okay, so roughly the Indian Railways has tendered all of the locos from. I have the number for 17,000, the tender which have been announced till now and ordered also.
No,
So okay,
that's not the correct number.
okay. So what is the number as per you?
We'll get
Uh,
back to you with the exact numbers.
okay. Oh, got it. Yeah. This was it. Yeah. Thanks a lot.
Thank you so much, Harshil.
Thank you. We'll take the next question from Anurag Agrawal. Please go ahead.
Uh, Hi, thank you for the opportunity. Sir, I just wanted to ask, we've mentioned that Fusion Electronics is one of the largest flex PCB manufacturers in country, and we're, dealing with a lot of OEMs, including a lot of high-end names. Yet we have failed to show a meaningful revenue from this subsidiary. Could you throw some light on that?
So, Anurag, thank you so much for asking that question. It's a turnaround story, and it is one of the largest installed capacities of flexible PCBs and box building capabilities in the country as we speak. And any turnaround takes a due course, and we will see. We are very bullish of short to mid-term targets, and we will see the results.
Could you give us some details about how it, went into that space where you acquired it? Maybe if you're saying it's a turnaround, it must have been probably bankrupt or in a very dire financial need of funds. So how it went into that space and what we're doing to get it out of that space. Also, yeah, that's the first part. Yeah.
Okay. No, so I don't think there was a financial reason of any sort, and there was no distress. It was just an asset which could not do well, and now we are just revamping it.
Okay. What is the strategy towards revamping it? Like I'm trying to understand basically how are we trying to turn around it as compared to the original promoters who have probably been in this industry if they had set up such a big capacity.
So Anurag, I think Concord today has done a few transactions in the past where we have shown our execution capabilities and demonstrated it with our skills as well as numbers in the past 2 or 3 financial years where we have partnered or acquired any stake in any company, and it has been a continuous recipe for us in terms of acquiring capabilities, not just businesses, but more from a capability standpoint and a technology standpoint. Fusion happens to be one of those strategic moves, and I think we have the right pieces of the puzzle in place. So we'll take it forward from there.
Okay, thank you.
Thank you, Anurag. All those who wish to ask a question, please use the option of raise hand.
So there are a few questions in the Q&A box. Let me get them clear. There are questions regarding the order book. Out of the 700 crore order book, what do you think is executable and what is the timeline for execution of the existing order book? And what kind of orders do you expect in the current financial year?
So typically what we have seen is until now we have seen an 18 to 24 month order execution cycle, and we are better positioned. We are more we are having more execution capabilities, and I think we will keep maintaining the similar growth trajectory going forward, as well as business as usual will keep happening in terms of more and more order winnings and growth pillars being more evaluated to add further chunk of strategic revenues.
Then there are questions around Fusion Electronics. So Nalini Kant is asking, what was the revenue in FY26 and what is the outlook for FY27?
So Rajni I think I just mentioned that it's a turnaround story, and we will at full scale Fusion can do about 200 crores of revenue based on the installed capacities, with a provision of doubling the capacities going forward.
A related question from Bharat Gupta. Do you see Fusion Electronics synergies defined only to railways, or we can work across other industries as well?
See, Fusion products sit on a very unique and a niche hardware layer, which is not only used in railways, in multiple other sectors as well. We as a company is more focused on railway ecosystem as a whole because we understand that piece better than other sectors, but we are not limited to only one sector.
Then there is a question around the current crisis, considering the ongoing LNG crisis and the geopolitical tensions. Do you foresee any possibility of the government reducing, postponing, or slowing down its spending on railway related orders and infra projects?
See, that's a very, very important question, and thank you for asking that. I think we all are living in a world of uncertainties today. Every few months, something or the other is happening in the geopolitical scenarios. And as a company, as a business, we all have to work judiciously and diligently both to ensure that we are disciplined enough to insulate our companies, rather minimize the impact of these uncertainties which keep happening across the world. So I think day by day, Concord is building resilience and discipline both to insulate ourselves as much as possible for such uncertainties.
There is a question from one of the participants. When is the mainboard migration planned?
So I think we are in the process. It's just a matter of very difficult to give a timeline to it, but we have already been on the journey.
There's a question from Kumari Soumya. Can you give a flow of how does Kavach order work? Getting approval to test run to full-fledged execution and how much revenue lies on each stage?
So a very in-depth question, Kumari ji. Thank you so much for asking that. And see, in any order of Kavach, there are typically 2 to 3 phases. One phase is the installation of, rather the production of the actual system, and then the inspection happens, and after that you basically go for installation of the product. If it is a loco Kavach, then the installation is limited to the locomotive itself, where we as a company are better positioned because we already have a lot of in-field engineers which are working on multiple locomotives. We understand the locomotives space because of advanced rail capabilities. So that gives us further efficiencies in the execution and installation of Kavach when it comes to a locomotive. But on the other side, if we talk about the station Kavach or the entire product, then there are you have to first produce, then install on a locomotive, then install on a station, install on the track side. The entire equipment has multiple layers of installation, and a certain percentage of revenue, rather the invoice is paid by the railways on supplying the product, and the balance is paid after successfully installing the product.
There's a follow-up question from Kumari Soumya. Last year we closed at 212 crores order book and we did 210 crore revenue. This year we are at 697 crores. Should we be able to convert 70-75% of this in FY27? It's a forward-looking question, so you can decide how to answer it.
Yeah, every management aspires to do more and more. We will also try to keep up to the pace. As a company, we are building more and more execution capabilities, and I hope we will keep growing based on the guidance which we have given.
There's a question from Shailesh Jain. Is the company expected to finish Kavach trial order in this financial year with ISA approval?
We are certainly working towards achieving the trial completion as well as ISA approvals within this financial year. Rest is up to a lot of geopolitical and factors which are beyond our control, but I think we are trying to insulate ourselves for it.
And the second part of his question is, what about other Kavach orders already received? Will company be able to complete in the timeline mentioned with the order?
We are working towards it and planning towards it, both.
Sure.
Thank you, sir. We'll take the follow-up question from Utkarsh Bhadauria. Please go ahead. Yes, Utkarsh.
Yeah, Gaurav. Gaurav, just wanted to understand how are we currently also doing what is the revenue bifurcation currently of the products which we are selling, and how was it earlier and how are we transitioning?
See, Utkarsh, again, a very important piece of information which I wanted to bring on the table, and thank you for asking that. See, earlier in my presentation, I was saying that many railway suppliers are limited to one or two domain of products, and if one of the products is not immediately required by railways, there is a cyclic nature of business which impacts the business.
Got it.
Concord, I think, is positioning itself to beat the cyclic nature of any such requirements of clients. We are working in the traction side, coaching side, way side, locomotive side, in multiple domains. And something or the other will keep on happening in such a large railway ecosystem to contribute to our top lines as well as to our bottom lines. So I see we have a great product mix. As on date, I would say we have a larger product mix of locomotive solutions, and that is where
Which is the Anaconda?
one of the products is DPWCS, and going forward, it will keep on evolving with time.
Why I'm asking,
It's an
Gaurav, is-
ever-changing product mix.
yeah, because we've earlier seen that your typically Concord was electronic supplier, and then we transitioned to different products. Anaconda, Kavach, we added new things, took over many companies. So, is the old model still alive, and how much is the question actually? And
Sorry, Utkarsh, I could not understand your question.
yeah, the old mod. So earlier we used to be more like a electronic supplier to the railway, right? And so what is up with that business? I mean, how much is that business also contributing? I understand there are new segments coming. What I'm actually trying to understand, which is the largest segment currently contributing? I guess it is DPWCS. And
I would not call it DPWCS. I would say today the larger contributor of our growth is the locomotives overall
okay,
business.
okay.
But this is an
Which includes
ever-changing
what
and a
all?
very dynamic. So it includes multiple locomotive products. We're not doing one or two. We are doing multiple technology-driven and propulsion-based subsystems.
Okay, sure. Thank you, Gaurav.
Thank you, Utkarsh. Anybody who wishes to ask a question, please use the option of raise hand. Sir, since there are no further questions, would you like to give any closing comments?
Yeah. So again, to conclude, I think Concord today stands at a very, very interesting point. We are operating at the intersection of four powerful themes: the overall modernization of Indian Railways, the more and more adoption of safety critical technologies, newer initiatives like green mobility, and a lot of intelligent railway electronics. With all of this, I think Concord is building the overall intelligence layer of modern railways, integrating propulsion, safety, and multiple other solutions, which are all scalable to create a large railway technology platform. So I think we are positioned for a much larger growth driven railway technology company. Our
Thank you,
goal
sir.
is just not to chase the product cycle. It is much more to build a multi-decadal railway intelligence and a control platform business from India, for India, and eventually for the global markets.
Thank you, sir. Yeah.
Thank you, Mohsin.
And thank you, sir. And thank you to all the participants for joining on this call. This brings us to the end of this conference call. Thank you.
Thank you, Mohsin, and thank you, Kaptify team, for taking this.
Thank you, sir.